Hello and welcome to Global Business, CCTV's new program with insights into Africa's ever-changing business landscape. From Nairobi to Johannesburg, from Lagos to Cairo, from small businesses to large-scale corporates, we take you directly to entrepreneurs making the headlines. I'm G2 Abraham here in the Kenyan capital of Nairobi, where it's 9 p.m. It's 2 p.m. in Washington, D.C. and 2 a.m. in Beijing. Wherever you're joining us from, welcome. Africa applauds U.S. investment on the continent, but asks for change the focus. And the turmoil in Libya spreads economic pain into Egypt. We bring you the details. And changing times in South Africa as companies adopt a sustainable approach to charity. Welcome. We start with what else but the U.S.-Africa Summit, where American President Barack Obama says that U.S. businesses have committed to invest up to $14 billion in construction, in clean energy, banking, and information technology projects across the continent. Now, the announcement was made at the ongoing U.S.-Africa Summit that's being held now in Washington, D.C. The summit is meant to showcase U.S. interest in improving trade and investment on the continent. The investments are meant to deepen U.S. economic engagement in Africa by fueling growth. This growth will go to support development for American businesses, which will further create jobs for both Africans and Americans. Dozens of African heads of state are mingling with U.S. and African executives at the forum. The group is primarily holding discussions on infrastructure, energy, agriculture, and consumer goods. Meanwhile, the African Union has called on the United States to diversify its investments in Africa. Speaking at the Business Forum on the sidelines of the U.S.-Africa Summit, Africa Union Commissioner Chairperson Nklonkla Dlamini Zuma, which said the U.S. remains the largest investor in Africa, but that it should focus on other areas other than fossil fuels.
Yes, Africa is open for business, and we encourage foreign direct investments to participate in the development of the continent. In fact, I think without fear of contradiction, now Africa offers the best opportunities on the planet, and it also offers the best returns for investments.
Joining us for more analysis on the summit in Washington is Daniel Renchez, who's live for us. Daniel, the U.S. on Tuesday announced that $14 billion in commitments from U.S. businesses would be invested into Africa. When and how could people here on the continent start to feel the impact of these investments?
Well, $14 billion, we haven't had the breakdown of all of those commitments yet, but we know that $2 billion of that will come from General Electric, which has got substantial investments in train manufacturing and airplane engines, and as well has been looking at the energy portfolio in Africa with keen interest. Marriott has engaged with $200 million, the hotel chain, and IBM at $66 million to help Ghana's Fidelity Bank with its security technology and all of that kind of infrastructure of technology. President Obama is due to speak within about an hour of now, and I think more details of those investments will come out. But one sort of slightly contextual comment I'd make is, if you look at US foreign direct investment, in 2012 the number was 31 billion US dollars. Well, this doesn't fundamentally change the picture of US investments. It shows that the US is interested in moving forward and having momentum, but the number itself doesn't really tell us anything.
It's being said that American interest will go beyond Africa's oil and minerals sector, which some say is China's focus. Now, what other areas of investment is the U.S. looking into?
Well, energy is one of the big pushes of the Obama administration, its Power Africa initiative. Alongside that, I think the US has particular expertise in things like financial services, all kinds of infrastructure, and also technology and communications. Clearly, there are opportunities going forward for a burgeoning middle class there. And so, they are looking at diversifying the level of investment. But certainly what we've seen so far is large corporations with interest. It'd be interesting to see moving forward if medium-sized companies begin to think about Africa as a potential for the kind of growth that you've just been reporting on.
Now we're halfway through the second day of the summit. What have the highlights been so far in the day? And as you said, the president is speaking in about an hour. Is there anything else that we should look forward to for the second day of the summit?
Well, actually, I thought the Korean president of the World Bank, Kim was very impassioned in his delivery, pledging extra money to the Power in Africa initiative, but really talking about how when he was young in Korea, they called Korea the basket case. And look at it now. He said, a few years ago, HIV, they thought HIV in Africa was insolvable in this generation. And look at how things are moving forward. So he gave a very impassioned speech. And if I could just quote you, one thing that he said was that we are getting to the point now where we need to see the potentials for Africa, not only for Africans but themselves, but as a growth engine for the global community. But I will temper that by saying that there are still significant areas in which all of the authorities here are looking at ways in which growth is still inhibited in Africa, not least issues to do with governance, to do with infrastructure. And I think at the end of the day, one of the most passionate speeches that was made today was by an African investor saying what we need to invest in is the future of Africa's youth. We have this burgeoning population between the ages of 15 and 25. We need to find ways to unlock the human capital involved there, much more emphasis on education and investing in the next generation of entrepreneurs.
Absolutely. The summit concludes tomorrow for its last day. Is there anything that we can look forward to in tomorrow's?
Well, this is the sort of classic summit. So this is where all of the leaders come together. They have the big photo calls. The first ladies go and do some particular meetings there. And you have some of the big issues. You have investments in Africa. You have governance. You have health. And so what you'll see there is the sort of big guns coming out. We've got tonight as well, we've got the president hosting all of these leaders at the White House. This will be a big challenge for all of the security officials here in Washington as the motorcades descend on what is a very small area of Washington, D.C. I think a lot of people are going to be staying away. But yes, this will be the classic photo call. And at the end of all that, President Obama will give us a press conference. And this is his opportunity to stamp his legacy on Africa. He's been criticized for not doing enough. I think this is his opportunity to say, this is the future of U.S. engagement in Africa.
We'll be waiting to see how the rest of the summit plays out. Thank you for that, Daniel Renches, joining us live from Washington, D.C. Now, let's take a look at some of the feedback on the U.S.-Africa summit that we've been getting from our viewers. We asked you, what agreements are you hoping that your government will return with? And this has been some of our responses to this. JB Atwuki says they are looking for opportunities to steal our resources. Indesh Ingwa said no GMO food for Kenya, please. James Kenyatta said the convention is a disgrace to African leaders because we have the resources and they have the money. So if they need to discuss about investments, we need it to be discussed in Africa. And Stanford Rashion said they should majorly handle economic issues as suggested, not politics, because I know how slippery the world is. Moving on to Libya, fighting continues in the country and there seems to be no signs of a breakthrough anytime soon. Militias are battling over control of key sectors in a country where there is no presence of police or army personnel to restore order. Now, these developments are having an effect on Libya's neighbors. Yasser Hakim explains to us the economic fallout of the Libyan crisis on Egypt.
A huge budget deficit, growing debt and dwindling revenues are just a few of the hurdles needed to be addressed by the Egyptian government. The crisis in Libya added more burden to Egypt's ailing economy. For instance, there's about 1.6 million Egyptian workers in Libya. The sight of their escape through the borders back to Egypt is a nightmare to economists.
Unemployment is already in the 20% level, and the return of all these workers will cause deep social and economic problems to the government, which is already unable to create jobs for the youth.
Investments have also been hit hard. Egyptian real estate companies were allotted with Libya's reconstruction worth $8 billion after the fall of Gaddafi. It's at a standstill now. Bilateral trade, especially Egyptian exports of vegetables and fruits, have dropped in the last 3 months from $3 billion to just over $1 billion and falling.
Borders were buzzing with trade. Now it's closed. The government and business need to find an alternative quickly because revenues are dropping. We should concentrate on trade with African countries that are more stable.
For now, Egypt is mediating efforts to help restore order and stability to its Libyan neighbor. Experts say it's vital for Egypt that Libya restore stability, not just politically. An oil-rich state, a Libya that is prosperous, would surely benefit Egypt economically, a benefit that Egypt badly needs. Yasser Hakim for CCTV, Cairo.
Etisalat Misr, Egypt's phone company controlled by Emirates Telecommunications, is finalizing on last-minute deals to issue what might be the country's largest IPO in almost 5 years. Now, sources close to the matter say Etisalat Misr has already asked banks for proposals to manage the share sale. The IPO is planned for Cairo and may raise up to $500 million. Egyptian companies are reviving share sales as they seek to benefit from a 30% gain in the country's benchmark EGX30 index for this year. Edit Food Industries, a snack maker partially owned by Actis LLP, is also considering an IPO. Etisalat has operations in 19 countries across the Middle East, Africa, and in Asia. All right, joining us now for some analysis on this is Yasser Hakim, who's live for us in Cairo. Yasser, what is Etisalat, Egypt's unit, going public for now?
Etisalat needs the cash and the cash flow and money to manage two things. First, it's the third largest out of three main mobile operators in Egypt, and it was the youngest. And therefore, it needs to put more effort to compete with the more established and experienced two in the market, which are Mobilil and Vodafone. So it needs to gain more in the market, needs to widen its coverage. The network coverage is still the youngest and the weakest, and it needs to increase that. It needs also to pay back some debt because it started late. It had to pump in a lot of money for marketing and sales and technical stuff and sell at low prices to be competitive. And a lot of debt has come up and is trying to pay back that debt and gain more market in Egypt.
Now, what impact could this IPO have on the telecommunications sector there in Egypt?
Now, it's the first fully Egyptian mobile operator to have this IPO and go into the market, the stock market. And I think that will be a trend that could be followed by the other two. It will strengthen the company, the Etisalat, further in the market. Already it has been seeing an increase of at least 5 to 10% year on year. This year in the first quarter and the second quarter it increased by 5% than last year. And last year it increased 10% than the year before. We expect even more growth in the coming few years, even with the political instability in the country and the economic recession. The mobile operators have been doing very well in the market and have been making profits. And there's more customers using it and more consumers using it. A 90 million population is a big market in Egypt. And so this will have a positive effect on the market, especially the mobile operators.
We're seeing more Egyptian companies considering IPOs. What's been pushing this trend?
Basically, the stock market this year has seen very high gains, 30% gain this year. Today, it has managed to get the highest gains since 2008, and 2008 was considered a peak year in the stock market. So it seems that Egypt, or at least the stock market, is recovering
from the 2011 uprising and the 2013 uprising and the instability in the country. And the companies are seeing that recovery. They see potential to put in cash in the stock market with IPOs, and they know there's a future in the Egyptian market. And that's why all these companies, included Etisalat, had the plans for the IPO back in 2010 and 2011, and they were postponed more than once. They were postponed in 2011, they were postponed in 2013, and now they've decided to go on with it, all these companies. So it's all a sign that the Egyptian economy is recovering, and that foreign investors and Egyptian companies are both trusting the way the new leadership is leading the economy and the economic reform program.
All right, thank you for that analysis. That's Yasser Hakim joining us live from Cairo. Now let's take a look at the African markets that we track here for you. Let's look specifically at South African stocks. They're ending higher after rebounding 3 straight downward sessions. Now this is although traders say that the main indices may have limited upside momentum. And Royal Platinum Mines' first half profits surged by 1/3. Industries and other stakeholders in Zimbabwe mull over whether to maintain the US dollar as its trading currency.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
The rebasing of Nigeria's GDP has been a long time in coming.
The information provides us much more scope to know what the structure of the economy is.
Welcome back. You're watching Global Business. Now, South Africa's Royal Bafokeng Platinum has reported its first half earnings rose by 1/3 thanks to currency weaknesses that lifted the rand price of metals that it produces. Now, the mine, which was not affected by a 5-month strike in the industry this year, said headline earnings per share for the 6 months rose 33% to 116 cents. RB Platinum said platinum market is forecast to swing into a deficit this year. This is due to an earlier strike against Anglo-American Platinum, Impala Platinum and Lonmin, but it said that prices are unlikely to accelerate from current levels. The firm says depressed jewelry demand will act as a counterbalance to an expected rise in automobile sales. Platinum primary use is for emissions capping and catalytic converters in vehicles.
We had a strong performance for the first 6 months. Predominantly because we had a stable workforce, we had a good operational performance, and that combined with the fact that we've got a well-capitalized balance sheet and a weaker rand-dollar exchange rate meant that our headline earnings per share increased or improved by 33% for the period under review.
We are not thinking about what AMCO did because our relationship that we enjoyed as partners, it comes a long way. Confronting issues and be open with each other.
There's a saying that when your neighbor's house is on sale, it doesn't hurt looking. We are not disinterested in anything that adds value to the company, and therefore anything that is value accretive and the price is right and there's a potential for value uplift and there's a blue sky, we are not averse to looking.
We remain in Zimbabwe, where the adoption of the US dollar in 2009, then hailed as a boom for the economy, is now a cursing threat survival for industrial sector. Now, the country's finance minister recently told Parliament that the use of the US dollar was partially to blame for some of the country's economic woes. For What's Hot segment tonight, Farai Mwakatuya reports on the debate on whether Zimbabwe should ditch the US dollar, and if they do, will we see the return of the Zimbabwe dollar?
The transition from the Zim dollar, whose value was wiped out by hyperinflation, to a multi-currency regime dominated by the greenback, brought much-needed stability to Zimbabwe's economy 4 years ago. However, the country's ailing economy seems to have lost the capacity to support its continued use.
The US dollar has become overvalued. We don't have the economy to sustain that. We don't have the current account to sustain that, i.e. the exports, the imports. We don't have the capital account, i.e. the levels of foreign direct investment to sustain the US dollar.
This has placed a premium on the cost of doing business. Industry is reeling under pressure of increasing costs such as labor and power. The situation has been made worse by the devaluation of regional currencies, in particular the rand, which has made imports from South Africa much cheaper than local products. Some analysts have been calling for adoption of the rand, which would make sense given that South Africa is Zimbabwe's biggest trading partner. That would require Zimbabwe to become part of the Rand Monetary Union.
To join the Rand Monetary Union, you have to play the game that the South African Reserve Bank will allow you to. And certainly this government doesn't have the hygiene and the discipline to be able to be admitted in a Rand Monetary Union.
Business leaders I spoke to say a local unit could be introduced and allowed to circulate alongside the basket of currencies already in use. Certain conditions need to be met first, such as ensuring that its value is backed by a resource, like gold for instance, and that there are adequate reserves of it at the central bank, and also ensuring that industry is ticking again and operating at above 60% capacity.
Capacity utilization directly because it closes the gap between import and export. It narrows the trade gap. And when you have narrowed the deficit, people have confidence in your own currency in that country.
But memories of hyperinflation fueled by government printing still linger, and if this plan is to work, it calls for discipline.
And let's monitor, let's see how we handle that. Let the confidence come back. I think the authorities, government is well aware that credibility has been lost around our currency. They will be careful to manage it.
Zimbabwe's finance minister has repeatedly said he will not bring back the Zimbabwe dollar, but with his back to the wall and quickly running out of options, Patrick Chinamasa may be forced to eat his words. Varai Mwakutuya, CCTV, Harare, Zimbabwe.
Let's look now at commodity prices for the day, specifically looking now at crude oil, which is posting at $104.92 per barrel, which is about 0.5% lower. Looking at cocoa, which is slightly up, coffee, which is posting at $194.40 a barrel, which is posting a rise of 0.36%. And when we return, changing times in South Africa as companies adopt a sustainable approach to charity. Welcome back. You're watching Global Business. Now, more and more corporate companies in South Africa are getting involved in creating food gardens. Now, poverty, unemployment, and the rising cost of food has made it difficult for millions in the country. But companies are moving beyond just handing out food to those that are in need. On our grassroots segment tonight, Sumitru Naidu looks at the big drive by South Africa's corporate world to empower local communities.
Dis-Chem, a health and pharmacy group in South Africa, decided to develop its own vegetable garden on its property in Midrand after being inundated with requests from several charity organizations for food to be donated.
Children are going to bed hungry, they cannot concentrate at school, they cannot focus because they are on an empty stomach. So with the hunger that is so prevalent, unfortunately, in our country, what we wanted to do is to just start a food garden that we could give proper, nutritious food to people.
Dis-Chem converted the vacant land behind its offices, which was previously used as a dumping ground. Using scientific methods, it now has a garden that provides vegetables all year round. The organic food garden has been running for 10 months now. This organic food garden is run by the Dis-Chem Foundation. It's managed to provide some employment for people in the area. It also manages to feed up to 5,000 people a month, mostly at homeless shelters through feeding schemes. The Puta Dijaba home in Alexandra is one of 25 centers that receives fresh produce from Dis-Chem every month. The home caters for at least 500 children and elderly people through its soup kitchen on a weekly basis.
Because of the unemployment rate is so high in Alexandra, the unemployment rate is more than 65%. And ever since we started getting food from Dis-Chem, it's helping a lot of people.
The garden employs 13 people from the local community who have been trained to grow vegetables and maintain the garden.
I love working in the garden because garden feeding people, helping those who can help themselves. Planting is what I love, even though I didn't have that experience that I have right now. Planting is great.
Dis-Chem has so far invested $50,000 in this project. It now wants to expand the initiative by providing small plots of land at low cost to people from local communities who can create their own gardens.
They're going to be trained correctly in how to farm and how to manage it. They will be supplied with the tools and with the seedlings or the seeds, and they will then be able to support their family or people in their community and also hopefully turn it into a business.
Dis-Chem has joined dozens of other companies in a growing trend to create a culture of sustainable organic gardening in South Africa. Sumitra Nadu, CCTV, Johannesburg.
All right, let's look now at how your money is trading, specifically looking at Nigeria's Naira, which strengthened against the dollar on the interbank market, reaching its strongest in almost 3 months. This is as a unit of Royal Dutch Shell sold dollars and demand for hard currencies continued to weaken. And just before we go, coming up on Global Business tomorrow, Egyptian President Abdel Fattah al-Sisi on Tuesday inaugurated plans for the development of the Suez Canal. The project is estimated to cost $20 billion. We follow up on the implications of this development to the country. And billions of dollars are pledged at the U.S.-Africa Summit. We analyze the impact of U.S. interest on the continent and where this leaves other competitors for investment and trade opportunities here in Africa. And that's it for this edition of Global Business. Remember, you can send us your feedback to globalbusinessafrica@cctv.com. You can also visit our Facebook page, CCTV Africa. You can also stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I'm G2 Abraham. Thanks for watching.